Ladies and gentlemen, good day and welcome to the Q4 and FY'25 conference call of Bansal Wire Industries Limited. From the management, we have Mr. Pranav Bansal, MD and CEO, and Mr. Ghanshyam Gujrati, CFO, to take the discussion forward. We also have an investor relation team from Adfactors. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Darshan Mankad from Adfactors PR for opening remarks. Thank you, and over to you, sir.
Thank you, Riya. Good morning, everyone. We welcome you to the fourth quarter and full financial year ended March 31, 2025 earnings call of Bansal Wire Industries Limited. Before we begin, please note that certain remarks made today may constitute forward-looking statements subject to inherent risk and uncertainties concerning our future financial and operational performance. We thank you for your patience in the event of any technical disruptions, and we assure you we will endeavor to restore the connection swiftly. I will now hand over the call to Mr. Pranav Bansal, MD and CEO, for his opening comments. Over to you, sir.
Thank you, Darshan. Good morning, everyone, and welcome to the earnings call for the fourth quarter and the full year ended March 31, 2025. I am delighted to connect with you all again to share and discuss our operational and financial performance for January to March quarter. The results, earning release and investor presentations are available on our website and stock exchanges. We believe you had a chance to go through it. I am joined by Mr. Ghanshyam Gujrati, our CFO, who will take you through the financials in details post my remarks. So the last year has been a landmark period for us, showcasing exceptional performance driven by strong demand across core sectors such as automotive, in construction and engineering. This year also marked the commencement of production in our specialty wire vertical, featuring high value-added products like bead wire, hose wire and steel tire cord. With a robust market opportunity ahead, we now have a total installed capacity of 5.5 lakh tons per annum. This strategic expansion positions us to capitalize on the growing demand while continuing to deliver superior quality solutions to our customers. We are confident that this enhanced capability will further strengthen our market presence and unlock new growth opportunities, especially with an additional 120,000 tons of capacity, which is scheduled to be commissioned by the end of second quarter of FY'26. Following the introduction of our new products, the company has achieved a 69% overall capacity utilization for the year. This includes the Dadri facility and remains on track to reach an even higher utilization by the end of this fiscal year, with our total production capacity set to reach 6.8 lakh tons. We have also improved our product mix, contributing to better margins and reinforcing our commitment to value-driven sustainable growth. As we begin the next year, we remain optimistic about our growth trajectory and are confident in continued progress of Bansal Wire Industries, as well as the broader advancement of our nation. While challenges such as fluctuating raw material prices and geopolitical uncertainties persist, we see immense opportunity in both domestic and the international market. Our unwavering focus on operational excellence, quality and sustainability continues to position us as a trusted partner in India's journey towards modernized infrastructure and global competitiveness. With that, I would like to now hand over the call to our CFO, Mr. Ghanshyam. Thank you.
Thank you, sir. Thank you, Pranav sir. Good morning, friends. Now I shall share the summary of fourth quarter and full year financial performance with you. For quarter 4, financial 25, our revenue grew 33% year-on-year to 940 crores. EBITDA surged 59% Y-on-Y to 75 crores. And net profit for the quarter stood at 33 crores, up by 36% year-on-year basis. For financial year 25, revenue stood at 3507 crores, higher by 42%. EBITDA rose at 86% to 278 crores, while net profit jumped to 95% to 146 crores. I am happy to report that EBITDA and net profit margin for the quarter 4 expanded by 130 basic points and 10 basic points on year-on-year terms. We will now open for forum for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Prateek Singh from DAM Capital. Please go ahead.
Hey, hi Pranav. Congrats for a good set of numbers. The first question is largely on volumes. So if you can guide us as to what kind of volumes we did in Q4 and full year of this year. And if you can also help us with the breakup for both these numbers in low carbon, high carbon, and stainless. That's the first question.
Yeah, hi. Good morning, Prateek. So for the full year, we did about 344,000 tons of volume, whereas in the fourth quarter, we did about 98,000 tons in total. As far as the segment-wise breakup is concerned, we do not disclose those numbers today, but we will try and fetch you some details later.
Sure. And any guidance on the next year volumes? How would we do?
So I think right now where we stand, the demand looks good. We have a good capacity installed and more coming our way. So I do not believe that there is any reason we should not be able to grow at about 20-30% for the year in volumes. And
what kind of confidence do you have to maintain the kind of margins that we did this year? Because this year was a super year in terms of margins. Given that you are growing volumes, would we be able to maintain these margins going ahead?
So, sir, this year there was a mix of two things that helped us grow our margins. One was a superior product mix, which happened because we did not have a lot of volume to sell in the lower EBITDA margin business, which for the year 25-26, we would have a good quantity in even the lower EBITDA business. So our product portfolio or our product mix will be changing in 26. Therefore, if we grow at, let's say, 20 or 30% in volumes, we are not expecting to grow at the same pace in EBITDA as well. Therefore, our margins might reduce or nominalize, this year.
Understood. And just last question before I join back the queue. If you can just elaborate on the status about hose wire and steel cords where we are, and also on this 1.8 lakh ton steel plant that we are doing in Gujarat.
Sure, sir. So steel cord, our samples have already reached some of our customers, and till now everything looks positive. I think we remain on track to start our production very soon. As far as hose wire is concerned, hose wire has been doing good. We are seeing very good and positive reactions from our customers. We are waiting for a couple of more approvals, which will come shortly in the next 1.5 months, wherein we should be able to then ramp up our capacities very quickly. As of now, we are operating at 20-25% capacity utilization.
Thanks, Pranav, and all the best.
Thank you. Next question is from the line of Vineet from Investec. Please go ahead.
Hi, Pranav. Good morning. Pranav, a couple of questions. One is, considering that we've already done almost 1 lakh tons in this quarter, and given you are guiding for 25-30% growth, volume growth for the next full year, even if we annualize this 1 lakh ton run rate, we should be able to achieve broadly a guidance. So don't you think this guidance is slightly on the conservative side?
So, sir, we believe, to be a little conservative whenever committing you a number. It'll be better if I am able to achieve a higher number than I commit. So my guidance would remain the same, 20-30%. Of course, there are opportunities wherein we should be able to grow at a higher pace. But I think 20-30% is a good number and a safe number to consider.
Okay. Pranav, second thing was on inventories, which has gone up this year. Any comment on that? What was the reason for it? Or is it the case where we have stocked up much more in anticipation of demand, or some of deliveries could not happen?
Sure, sir. So here, I think there are 2 or 3 different factors here. First, we have done a complete consolidation of all our group companies in the last year. Therefore, the inventories of all the companies are now in Bansal Wire. You will see a higher number therein. Second, we are operating today out of 6 different locations because the 2 older entities have not completely stopped manufacturing. Although the sales have stopped from those entities, but the manufacturing is still there in the name of Bansal Wire. Therefore, we are having to keep inventories in 6 different locations. Over the course of this year, that should come back to a nominal level.
Understood. Pranav, and if you can throw some light on factoring, which we were thinking about for our receivables. What's the status there? Are we planning to start with it this year? How are you thinking about it?
So, sir, our limits are already tied up. We've in fact started using some of it in the fourth quarter as well. But most of the limits are tied up for us to be using in the first and second quarter of this year. So that is all in place, due to which we will be able to see a better working capital cycle in the company. And this will start from the first quarter itself.
Understood. And Pranav, lastly, before I move back to the queue, stainless steel rod, we've announced capex now, plans there. How will that happen? Is it a case that the whole facility, including the wires and the steel rod manufacturing, will commence by September 27, or it will happen in a phased manner wherein some part of it will get commissioned earlier and some later?
Sir, we are expecting the wire facility to be commissioned maybe a quarter before the steel manufacturing. So in the third quarter is when we expect the commissioning of our backward integration. But in the second quarter, we should see some numbers from the wire facility. So stainless steel and low carbon will start before that.
Okay, and if I'm not wrong, this is Q2 or Q3 of FY'28.
Yes, absolutely.
Understood. Thanks, Pranav, for this. Thank you.
Thank you.
Thank you. Next question is from the line of Vidit Trivedi from Asian Market Securities. Please go ahead. We got disconnected from Mr. Trivedi. Next question is from the line of Mr. Akash from Dalal & Broacha. Please go ahead.
Yeah, thanks for the opportunity. And Pranav, congrats on a great set of numbers. So firstly, sir, I'd like to understand why have our gross margins dipped this quarter from around 23% last quarter to 21%?
So that would be some fluctuation in raw material. But even that, not a big number for us.
Okay. Sir, what kind of utilizations we have achieved at Dadri currently? Scale are we operating at currently?
So, sir, in the fourth quarter, we've done about 25-30% more output as compared to the third quarter. And I think the last month, we closed at about 40% utilization in Dadri.
Okay, so we have achieved 40% utilization.
Yes.
Great. And my second question was to understand from an industry standpoint, from the end user industry. I think this year we have seen great demand coming from infrastructure and general engineering, right? Apart from automotive, of course. So, going forward, which industries do you feel will contribute more and more for us?
So, sir, I think we are pretty much we are very diversified when it comes to end user industries. So therein we are not really dependent on one specific industry for our growth. But just to give you a perspective, I think automotive, cable, infra, general engineering, these have always been the major contributors of our growth, and that will continue even this year.
Understood. So we have started LRPC wires already, or we will start in FY'26?
We've commissioned the facility. We are right now waiting for some BIS approval to start selling to all our customers. So which should be with us in the next 10-15 days.
Understood. I'll come back in the queue.
Thank you. Next question is from the line of Shweta Dikshit from Systematics Group. Please go ahead.
Hello. Yes. Hi. Good morning. Thank you for the opportunity. My question is regarding what is a steady state capacity utilization to assume for the new capacity coming in. Because if I look at the run rate as of now, on a full year basis, the capacity utilization comes to around 63%. But if I annualize the fourth quarter number, we are already at 71% capacity utilization. So what is the level that we can look at to improve the existing capacity utilization? Also, once we commission the new capacity, 1,20,000 tons by the end of second quarter, how much utilization can be achieved within FY'26 on that volume?
Sure, ma'am. So, ma'am, historically, we have been able to achieve 89-90% kind of a capacity utilization. And I don't see any reason why we should not be able to do it even in the new facility, if not higher. And, of course, we have another 1.2 lakh tons which is to be commissioned in the next 2 quarters, which will give us enough room to grow quarter on quarter. As I said, for the full year, we are expecting about 20 to 30% kind of a volume growth if everything remains as it is. So I think, the capacity is there for us to consume.
And any sense on what kind of EBITDA margin we can expect going forward? Because on a per ton basis, we are currently at around 7,600. And but for the full year, the average is around 8,000 rupees per ton. So we have already seen a little bit of softness in EBITDA per ton this quarter. So is this the reduction we should estimate for FY'26, or there can be a further reduction in our EBITDA per ton?
So, ma'am, historically, our strategy has been that 1 year we play on higher volume, and the next year we try to maintain a growth rate with an increased EBITDA. So last year has been a year where we've been able to increase our EBITDA. This year we are looking at as a year where we might reduce our margin a bit, but increase our volume, so that by FY'27 we again come back to this kind of EBITDA with a higher base of volume. wherein we would see some slight reduction in EBITDA for sure. If we are able to gain 20-30% volume growth, I would believe that another 10% reduction in EBITDA would be possible.
From the 4Q exit that we saw, right?
Yes.
Okay. Thank you so much.
Thank you. Next question is from the line of Mayank Bhandari from Asian Market Securities. Please go ahead.
Thanks for the opportunity. Sir, what would be your capex in FY'26 and 27?
Sir, we have announced one major capex, that is the backward integration, wherein we are putting up a 1.8 lakh ton capacity to making our own wire rods and another 60,000 wire capacity. So for this, we are looking at about 600 crores of total investment. So that's the main capex that we are looking at as of now. Apart from that, whenever, as and when we get good orders in specialty wire, we would be also looking at expanding in a greenfield plant for specialty.
So this 600 crore is evenly split in 26, 27?
Yes, sir. 26, 27, we will see majority of this happening in 26, and some of it will be in 27.
So how are we going to fund this 600 crore if it's happening in 26? Because our cash position is little not helpful at this moment in terms of fundraising.
So, sir, even on cash flows, we have actually been able to go towards cash flow positivity this year. The last quarter, we've seen only 20 crores of reduction in cash flows, wherein we started with about 100 crore reduction. And looking at the factoring and all these optimizational benefits in our working capital, we should be able to turn towards cash flow positivity within the first quarter of FY'26. With this being said, after our IPO, we've also reduced our debt significantly. Our total debt to equity ratio from 1.5 has come down to 0.5. So we can leverage our books with some kind of debt going forward. And we also have a lot of good cash flows that we are expecting in this year and the next year. Even if you look at the last year, we did about 270 to 80 crores of EBITDA. And even with reduced margins, but we will be growing our volumes by 20-30%. So we are expecting a higher EBITDA this year and the year after that. Therefore, a mix of internal cash accruals and some amount of debt, we will be able to do this project.
And about the export opportunities, what is the export contribution in this FY'25 revenue?
Sir, I do not have those numbers with me. Maybe Ghanshyamji, can you comment on this?
Sorry? Yeah. Export is around 350 crores.
So about 10% of our revenue.
Yeah.
Okay, sir. Thank you.
Thank you. Next question is from the line of Hemant Soni, an individual investor. Please go ahead.
Sir, thank you for providing me the opportunity. But, sir, sorry to say, but not very happy with the results because I was expecting a better number considering the ramp-up of the Dadri plant. So, coming down to my questions, I have a couple of questions. Sir, first of all, the entire capacity of Dadri is available right now. And the second question is, sir, we had earlier guided for 5 lakh tons of sales volume in FY'26 in a media interview. Now we are giving a lower guidance. And one more thing I wanted to ask is that 1.2 lakh tons, the expansion is over and above the 5.5 currently?
Sure. So, sir, right now we are at about 3 lakh tons of capacity in Dadri. Another 0.5 lakh tons is to be commissioned maybe within the next 1 month. And after that, we are also looking at an additional 60,000 tons of capacity, so about another 0.6, 0.7 lakh tons of capacity to be commissioned by the second quarter. So Dadri from 3 lakh will go to about 4.2 lakhs in the next 2 quarters. That is one. As far as the capacity or the sales guidance for the next year goes, we have already done a good growth this year, and the next year also does not see. We see a good demand for the year after this as well. Therefore, our 20-30% guidelines, although they might seem a little conservative, I think are good guidelines for the first year. But yes, there is definitely an opportunity for us to grow at a higher rate.
So, the current capacity as of now, including the Dadri, is 5.5 lakh ton, correct?
Absolutely, sir.
And another 0.5 lakh tons will be added in the next month, June, and then
1.2 lakh tons. 1.2 lakh tons in total will be added in the next 2 quarters.
1.2 lakh tons will. So it will take the entire capacity to 6.7, right?
Absolutely, sir.
So the entire 5.5 is available right now, right?
Yes, sir.
And sir, what is the blended capacity utilization for 5.5?
Blended capacity utilization, I think for the full year was about 69%.
No, I'm talking about the fourth quarter, sir.
Fourth quarter, I do not have the numbers now, but you can connect with Mr. Ghansham and he will give you the details later.
So, sir, are we expecting some sort of improved capacity utilization in quarter one?
Sir, we are definitely expecting some better numbers every quarter herein. Although the first quarter for our industry generally is a little slow because of labor shortages throughout the northern part. But I think from the second quarter is where you will see better ramp up happening.
Even I was expecting better numbers in quarter four actually, given the ramp up of the Dadri plant, but a little disappointed because there was no Q&Q growth.
Actually, I would say that I would add one more point that you might have seen that our working capital has been utilized and the capitalization has already also been done during this quarter. And because of all these things that EBITDA is our higher, but due to these two factors that our the profit has come down. I would love to add the performance.
But no problem, sir. We'll try to deliver you better results in the coming quarter.
Okay, sir. Thank you.
Thank you. Next question is from the line of Yashvi from Molecule. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Yes, ma'am.
Morning, sir. My question was regarding the consolidation of the associate companies. So, from what I understand, we have consolidated two companies, which is Bansal Steel and Power and BWI. But we still have two lease agreements with Bansal High Carbon Private Limited and Balaji Wires. So, are we planning to consolidate these two entities as well, or what is the scenario there?
So, ma'am, in the last year, we have actually consolidated all sales for these two entities also. Only the manufacturing still remains because Dadri is not fully available in terms of operational capacity. As and when we are able to ramp up in Dadri, those capacities that we are operating in Balaji and Bansal High Carbon will shut down. This should happen within this year. But again, with that being said, all revenue and EBITDA is already part of Bansal Wire.
Okay. And my second question is, you're saying that the EBITDA margins next year shall dip due to the volume growth you're expecting, which is 20 to 30% growth. But as we're adding the specialty wires, don't you expect a margin spike instead, as we're also doing bid wires, horse wires, and steel cords, and IHT and OHT wires? So why are you expecting a margin dip? And how does the volume affect the margins?
Sure, ma'am. So these products that we've added, for example, steel cord, hose wire, these are products which have a long-drawn approval process. although that approval process has started, but it will take us a year to, see good ramp-up happening in steel cord specifically, which will increase our EBITDA. Therefore, for FY'26, we do not see a lot of benefit coming from specialty wire vertical. FY'27, however, we should see some good numbers happening. Coupled with backward integration that will happen in the later part of 27, I think our EBITDA should be coming back to normal in 27.
Okay, so specialty shall show up in the numbers in FY'27 and not the next year. Am I correct there?
Yes, absolutely.
Okay. And so you'll also add up the capacities for the steel cord once you are done with the sampling and getting the approvals, and then you'll look forward for capex in that segment. Is
Absolutely.
that correct? Okay. Okay. Thank you.
Thank you. Next question is from the line of Vidit Trivedi from Asian Market Securities. Please go ahead.
Hello.
Yes,
Yes, sir.
Hi, sir. Good morning. Most of the questions have been answered. Just wanted to check, have we gained any market share during the financial year?
Sir, although I do not have the right details with me, but just to give you a small understanding, as per our understanding of the industry grows at about 6%, 7% every year. Whereas we have grown at about 35% in revenue, and we would have definitely outgrown the industry in volumes as well. So therefore, there would definitely be an increase in market share, which has been the case throughout. Even in the last 10 years, we've been growing at 20-25%, whereas the industry grows at 6-7%. So every year we grab market share.
Got it, sir. And I'm sorry, I dropped off the call. What's the capacity utilization in Dadri?
Capacity utilization by the last month of this year was at 40%.
Got it, sir. Thank you.
Thank you. Next question is from the line of Jay Vagasia from Patel Equities. Please go ahead.
So, hi Pranavji. So, just wanted to make sure, we are doing 600 crore expansion in Sanand. So, how are we going to fund it? Because cash flows, CFOs are negative. So, have you achieved financial closure? Any details you could give on that?
So, sir, as I previously mentioned, we are already going towards positive cash flows, and I think from the first quarter of next year, you will see our cash flows coming in from our operations activity. So that will really help us in funding this capacity expansion in the next 2 years. So, and even at EBITDA front, we see some growth happening every year. Therefore, at 270-280 crores of EBITDA that we did last year, we are expecting something better in 26 and 27. That coupled with a bit of debt, we should be able to manage this backward integration.
Right. No, but again, the problem is, Pranav, it is receivable days. So, is it pretty standard, or are you on the higher side in receivable days as compared to industry? Your thoughts?
Sir, we have been at this kind of a level throughout, many years and been able to grow at 20-25%. But yes, definitely, this is something that we are improving on. And from the first quarter of 26 itself, you will see some change happening. We will go towards positive cash flows and also better ROC. Although we've closed this year at about 19%, our quarter 4 specific ROC was 21%. So as we guided earlier as well, we want to remain at above 20% kind of a number in ROC, and positive cash flows is what you will see the whole year.
Okay. And last question is, once the Sanand comes online, would it help us in reducing our inventory? Because now being a backward integrated, would it help us to any extent, or it is just for the security of our raw materials?
The backward integration would help us in two different ways. First, it will help us in securing our raw material. and in some areas we are not able to grow because of raw material availability. So that will really help us. Second, it will help us in expanding our margin profile. Dip in our margins this year, but by FY'28 we will come back to the 25 margin numbers because of this backward integration. Inventories, it will not really reduce because any inventory that we carry in raw material, we will carry in wire rod, we will carry in the raw material for backward integration.
Got it. Okay. Thank you, Pranav.
Thank you. Next question is from the line of Prakhar Khajanchi from Anand Rathi. Please go ahead.
Hello. Hi, Pranav. Thank you for the opportunity and congratulations on a good set of numbers. I have just one question. Could you please share the capacity breakup between stainless steel, low carbon and high carbon?
Sir, we do not disclose segment-wise numbers or capacities. Overall, our capacity was at 5.6 lakh tons. Majority of it, I could say, is low carbon, and then would be high carbon and stainless steel.
And what kind of EBITDA per tons we can, see for this year going ahead?
So, sir, the last year we did about 8,000 rupees of EBITDA. And the quarter 4 we were at 7,600 rupees a ton EBITDA, which should reduce slightly because of the product mix and, grabbing higher market share this year.
Thank you.
Thank you. Next question is from the line of Dipesh from Invesco. Please go ahead.
Yeah, hi Pranav. Thanks for taking my question. Sir, can you just highlight, because of consolidation we are a little confused, but like for like volume growth as a group, what was the volume growth that you saw in FY'25?
Sir, I think we did about 15% roughly volume growth, but for the exact numbers, we can get you that after.
No, this is fine. So 15% kind of a growth. Now, I just want you to understand, like you're guiding around 25-30% kind of volume growth, and you also say that industry is growing at 6-7%. So is there so much opportunity in India, given our market share, that we can grow at this rate consistently going forward? Or export will be a big part of the growth in the future?
So, sir, historically, we have been able to manage a 20-25% growth, although this happens wherein 1 year we try to increase our margins and maybe increase our volume by 10-15%, but the next year we try to increase our volume by 20-30% while reducing our margins a little bit. And the next year again we try to stabilize our margins. So therefore, even the last year has been a year where we've improved our margins significantly while only growing at 10-15% in volume. But 26 should be a year where we will sacrifice our margins a bit to grab a higher market share.
But when you sacrifice your margins and you take the volume from others, like do they also they have to also react, right? So when the industry is not growing, that's what I want to understand, because 20-25% growth in industry which is growing at 7%, how is it possible? Yeah.
So, sir, the good thing is that we are part of an industry in which, being the second largest steel wire company today, we still only have 6-7% market share. So therein we believe that there is room for one more Bansal wire every year. Okay. So we are not honestly taking away any quantities from them, but we would like to think of it as, getting the additional quantity that the market is growing at.
Understood. Got it. And secondly, you, in one of the questions you replied that you expect 10% reduction in the EBITDA per ton number. I just want to clarify, is that on the exit rate you're saying, or the full year number that you're saying that you 10% reduction?
So that will be on the exit, so 7,600 per ton minus 10%. Of course, it might vary a little bit due to the product mix. So, but yeah, in general, I think 10% number on exit is good to consider.
Okay, understood. And thirdly, basically the capex that you have in FY'26, once you said like 600 crore majority you will be doing in FY'26 only. So let's say like 60% you are going to do. And then Dadri mein you have a 30 crore capex which is lined up, right? So, mota 400 crore capex you will do, plus anything on specialty you also want to do in this year?
So, specialty we are not looking at a big number this year. That should happen in FY'27.
Okay. And inventory levels which have increased this year, you explained that because of consolidation that happened. But what is the normalized number? Like, can it go back to FY'24 levels this year?
Sir, it will not, on absolute terms, it will not go to FY'24 levels because from FY'24 to FY'26, our volumes will be higher by about 50%.
No, correct. I'm saying inventory days as a percent of sales. Can it go back?
Definitely, it will go to 24. It might even reduce because this year, as I said, we are focusing on positive cash flows and better ROCs. Therefore, overall, throughout even receivables or inventory days, we are targeting to reduce that by a good margin.
Understood. And the net debt to EBITDA,
we will get cash from the company.
Got it. And net debt to EBITDA has already crossed around 2. It's around 2.2 levels right now. Is there any threshold number which you don't want to cross? Is there any number in the mind?
Sir, again, for the last 20 years, we've been maintaining 4 kind of a gross debt or net debt to EBITDA, and we've been very comfortable. However, we don't believe that even with this expansion, we will have to go to that level again.
Understood. And last question.
We are again looking at a good EBITDA coming our way in the next 2 years.
Understood. And the last question on my side is, like, since your company is new, we just want to understand, is there any seasonality in the business, or like you can see a volume growth every quarter?
Sir, there's not a lot of seasonality in the business. However, just the first quarter of every year, we see a lower volume owing to labor shortages in the northern part of India. And that is where 50-60% of our sales comes from.
Okay.
So there is some less offtake in our customers in northern area.
Okay, and then due to monsoons,
does not
there's no impact?
affect us very long.
Okay. And then any monsoon impact, because that construction is a big part of your, right? So that is also, so H2 should be heavy in volumes. That's how to read it.
Yes, sir. Generally, H2 is better than the first half, and second quarter is also good. Second is good. Third is the best. Generally.
Okay. Got it. Okay. Thanks, Pranav. Thank you very much.
Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in conference, please limit your question to 2 questions per participant. Should you have a follow-up question, we request you to rejoin the queue. Next question is from the line of Hiten Boricha from Sequent Investment. Please go ahead.
Hello. Hello. Yeah. Good morning, sir. Sir, my question is again on the capex. So if you can just give us the breakup of the 600 crore, how much we are going to spend this year and how much we are going to spend next year, just to understand how will our debt look like by end of this year. And also if you can share the cost of debt.
So, sir, I believe we are looking at about 350 crores, 350 odd crores or 400 odd crores in total of investments this year. And about 250 crores next year. That's the total number.
Okay. And if you can share the cost of debt, sir?
Cost of debt, Ghanshyamji, can you take this?
It would be around 8.25 to 8.5.
Okay. Yeah. Also, I have one small suggestion, sir. If you can add your volume numbers, quarterly basis, and EBITDA per numbers in your presentation, it would be helpful for us as an analyst to understand more and then ask you questions on the Concall.
Sure, sir.
Yeah. Thank you.
Thank you.
Thank you. Next question is from the line of Akash from Dalal & Broacha. Please go ahead.
Yeah, actually, I also wanted to understand the reason for the higher tax incidence that we have every quarter. I think this quarter it was almost as high as 34%. So, why is it so high?
Can you say that again, please?
Yeah, actually, I wanted to understand the higher tax incidence that we have. So, this time I think the applicable rate was almost as high as 34% on the PBT. So, why such high taxation numbers for us?
Ghanshyamji, can you take this?
Yeah. Actually, our subsidiary is under MAT, subsidiary is under MAT, and because of that we are paying 33%. Actual outflow is not there. The incidence of deferred tax, the incidence of MAT is there actually. So because of that, it is looking like that 34%. Otherwise, it is around 25%.
So when do we expect this to normalize? I mean, going forward, now that we have brought most of our business in our standalone entity?
Yeah, in FY'26.
26, so we'll come back to 25%?
Yeah. We will come back to 25%. Actual outflow is not there.
Sir, actually it is already 25%. It is only on the face of it that you see 34. Actual outflow is 25% still.
Understood. So the cash outflow is not there, but optically it looks like it's 33, 34%.
Yeah. Because of the legal compliance, etc., it is going to be there.
Fair enough. But in FY'26, it shall normalize, right?
Yeah.
Great. Thanks.
Thank you. Next question is from the line of Prateek Singh from DAM Capital. Please go ahead.
Hi. Thanks for taking my question again. Just wanted a clarification on a prior answer. Pranav, when you said that specialties will start contributing from 27 onwards, so this year there will be some contribution from hose wires, right? And they also are decently higher margin, like 20,000 to 25,000 rupees per ton kind of with the margin business. So will we have some contribution from hose wires this year?
Sure, sir. We will definitely have contribution from hose wire, but that contribution in the total scheme of things is not very significant.
Right. No, so I understand that 20 KT is the total volume. So this year, can we expect like 5-10 KT, or it would be even lesser than that in terms of hose wires?
Sir, it all depends on approvals, although we are expecting something good to happen in the next 25-30 days. So I think 5,700 KT, 5,700 tons is a good number to consider.
Understood. And again, I'm just touching it a bit, so pardon me for that. Just want to understand what kind of margins, very ballpark, I understand that we're not still selling it. So what kind of margins do we make there? Is it 20,000-25,000 rupees per ton number correct, or can we do a bit higher or lower than that?
Sir, right now I do not have the margin numbers with me, but I think it should be in line with our guidance before.
Okay, understood. Thanks a lot.
Thank you. Next question is from the line of Shweta Dikshit from Systematic Group. Please go ahead.
Hi, thank you again. So one question, what would be your the capex for FY'27, capital expenditure for FY'27, and what kind of capex trajectory are you looking at for beyond FY'27 in your medium-term growth plan?
Ma'am, as I've said before, we are looking at about 600 crores of capex for backward integration, which will happen in 26 and 27. Apart from that, maybe another 100 crores in some upgradation and some capacity, some expansion in Dadri. So 700 crores of, I think, total capex in the next 2 years, which will be funded majorly through internal accruals and some amount of debt.
Any plans of capex beyond FY'27 if anything is under evaluation, or what is your targeted growth plan that this is the steady state capex that you are likely to take on every year?
So, ma'am, for the wire business itself, I think another 100-150 crores of capex every year is what we would look at to grow regularly. And apart from that, the opportunity that we have on hand is the specialty wire business, the steel cord division, which has a potential for us to grow at about 10 times from the pilot project that we have. So that is an investment that we would like to do as and when we see some good results coming from the customers. But that number is not known for us today.
Understood. Thank you so much.
Thank you. Next question is from the line of Praful Kumar from Diamond Asia. Please go ahead.
Hi, Pranav. Congratulations on good numbers. Just to summarize, sorry, I joined the call a bit late. You're talking about 25% volume growth next year with slightly lower EBITDA per ton given the market share gains that you're looking at. and improving ROCs, correct?
Yes, sir, absolutely. Improving ROCs and improving cash flows.
And free cash flows. Okay. Secondly, on that big project that you got an entire team for, how is that progressing, and when should it see light of the day? How are the pilot going and feedback on the product?
So, sir, the steel cord and hose wire project currently is going better than our expectations. Hose wire, we are already seeing 25% capacity utilization, and this should jump significantly in the next 2 to 3 months after we get some approvals from our customers. Apart from that, steel cord also, we have already sent samples and they are under evaluation. Right now, we've gotten good response of products from our customers as well. So I think we are on track, if not better, to get some good utilization next year. And once we are able to get some approvals, we will start expanding in that specialty wire vertical.
Okay. And the last one is there any PLI that you fall into in terms of this product, or you're looking at that?
Sir, we've applied for some PLIs. We already have a PLI for bead wire in Bansal wire, which we will start utilizing this year. And apart from that, we will also be able to apply for PLI in specialty wire, the steel cord project, whenever we go for it.
You will be eligible, correct?
Yes, absolutely.
Okay. Good luck, Pranav. Do well. Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to Mr. Pranav Bansal for closing comments.
Thank you everyone for joining the call. I hope we've answered all your queries. For any other questions, please do not hesitate to contact us. We will get you all the information that is available. Thank you again. Looking forward to your continued support.
Thank you. On behalf of Bansal Wires Industry Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.